There's a lot of drama happening in the Capitol right now.
There
between
is.
two of the nation's top economic policy people. Take us through what is going through with the drama between Mnuchin and the Federal Reserve and why that matters to us.
So right now there's basically an argument at the very top over the Fed's emergency lending powers. So to explain what that is, basically in March, the CARES Act appropriated cash to finance the Fed's backstops of the bond markets, which made it easier for companies and municipalities to borrow debt, and it's sort of just smooth functioning in the bond markets overall. And now what's happening, and to oversimplify it, Treasury says that markets are functioning normally and we want to take away some of that cash, and the Fed is saying it's way too soon. And that matters because we're in a very tricky spot. Congress hasn't made any progress on their stimulus negotiations, and now the Fed might be handicapped in the aid that it's able to provide. So it's just a tricky time, especially when you consider that cases are spiking.
Yeah, that's exactly what I wanted to ask you about. Why can the Treasury Secretary do this when we're at a worse place now with the pandemic than we were at any other point in this year? And at the same time, we know that the economic recovery is tied to the number of virus cases and the way that the virus is just thrashing through this country.
So it's unclear, and I assure you there are Bloomberg reporters right now trying to figure out some of those motivations. But Mnuchin's argument seems to rest on, a lot of these funds haven't been used. He's asking the Fed to return about $200 billion. And he's right in that a lot of these facilities haven't been tapped that much. But I've been speaking with bond traders and analysts all throughout the pandemic who've been telling me just the fact that these facilities exist and that the Fed is able to step in at any time, that's been a huge comfort to the market.
Because when it comes to markets, it's about perception, right? It's about understanding that something is available, even if it's not being used. It's about understanding those emergency backstops, and that's what we've seen play out over the last few months. How's the market reacting to this?
So far, it's pretty muted. I've been taking a look at the corporate bond markets, for example, and you're definitely seeing some of the ETFs that track that market are down a little bit in pre-market trading. I think at this point, traders are really waiting for more details. You are seeing some pressure on the stock market, but it's hard to disentangle how much this is about this sort of spat that's going on versus the fact, like I mentioned, that cases are spiking.
Is there any sort of expectation that a spat can be resolved before the end of the year, given that we are seeing a lot of pushback right now and I think surprise about this move from the Treasury Secretary?
So it's hard to say, especially since we're in such a tumultuous time in terms of the political landscape of this company. But there is some comfort in that when President-elect Biden comes in, it'll only be 20 days between when these programs expire and when his inauguration happens. It'll still be tricky because he'll need congressional approval to reinstate some of these programs. That could be difficult in a divided government, but there is still that hope.
So for the uninitiated, just take us through the relationship between the typical relationship between the chair of the Federal Reserve and the Treasury Secretary, like when they work together, when they coordinate, because this happened back in the wake of the financial crisis.
Yeah, so typically there's this thing called central bank independence. The federal...
But that got thrown out in 2017 with President Trump. So.
Yeah, theoretically it exists, and it's still an ideal for, people who watch the Fed. But like you said, it's been muddied, and it's been even more muddied in this crisis. You've seen Treasury Secretary Mnuchin and Fed Chair Powell. They've been in constant communication, and it seemed like they were getting along. They've had to testify in front of Congress multiple times, and they really presented a united front. So it definitely took a lot of people in the market by surprise that there is this divide between the two sides. But again, the central bank is supposed to be independent. The chairman or chairwoman is appointed by the president, but their decisions aren't supposed to be influenced by politics.
There's about 60 days until January 20th, 2021, when President-elect Biden will assume office, assuming that everything goes according to plan. What can happen between now and then when it comes to the Federal Reserve and when it comes to the Treasury Secretary that could sort of derail markets?
60 days feels like a long
It
time.
does, especially given what we've seen over the last 2 weeks, right?
Yeah, in 2020 time, that's, an eternity. But we don't know if he's considering replacing Fed Chair Powell. There hasn't been a lot of reporting on that. We do know that he is looking to replace Treasury Secretary Mnuchin. And there have been some names floated, such as former Fed Chairwoman Janet Yellen. He said yesterday or this week that he has made a decision he will announce soon, but we're not sure who that is yet.
Katie Greifeld, Bloomberg Markets reporter. It is always great to see you. Happy Friday, and thanks for joining us on Quick Take today.
The biggest stories the moment they happen from around the globe. Subscribe to Bloomberg Quick Take now for insight in an instant.